everyone, and welcome back to another penny stock video. And I have one that I think is really exciting. I love this setup, so we're going to focus the whole video on this one stock, which is Sing, Single Point Inc. I'm going to go over why I love this setup, and if you saw my video about a week ago, we talked about a potential short squeeze on ABQQ stock, and that was quite successful, right? ABQQ, here's the chart. We'll zoom in a little, and you can see the short squeeze was quite successful, so my theory was correct here, and it did trips 2 to trips 8 so far. I think it can keep going, but that's already, a 4x move, so that's quite a solid short squeeze there. And so now there's some similarities to the setup with ABQQ and with Sing, and I'm going to talk about in more detail in a moment what those similarities are and why I think Sing could be a huge short squeeze. Honestly, this is such a nice setup, guys. So let's just jump right into it, right? Let's take a look at the float first, like we always do, which is held at DTC, which is 3.8 million shares. This is a micro float, tiny float. This stock can move very quickly. It can be very volatile. That's what happens when you have these low floats. We've talked about it before. When you have a tiny float like this, and there's a supply and demand type of circumstance, right, where there's high demand for shares, low supply of shares in the market, you can see explosive price action. Let's refer to the Sing chart real quick. We're going to come back to this chart in a bit as well, but let me just show you an example of the explosive price action it can have on a float like this. Here we can look at from mid-August of this year, so very recently, actually about 2 months ago, the stock did a move from $1 all the way up to $4. Explosive move. It only took a few days for this thing to run 400%, right? So what we're looking for is a repeat of this run. And so now we have a nice green candle today that can signify that the bottom is in and that the squeeze can start. But, obviously it's not all about technicals. What's the reason for the squeeze? What's the theory behind it? Let's jump into that in a moment. First, I'm going to show you a little more fundamentals happening with Sing because it's actually a great company from what I can tell, right? Take a look at this. Sing, Single Point Inc. update, now trading under symbol Sing, recently reported record second quarter revenue, $8.4 million versus $4.5 million in the same period of 2022, a 79% increase. So these guys are crushing it in the revenue department, crushing it, right? You're looking at, this was for, their second quarter of 2023, and compared to the second quarter of 2022, they did almost a 100% increase on revenues. That's a huge revenue growth to happen over just 1 year, and there's reasons for that, right? So here's a big reason right here. This is a press release from very recently, October 2nd, Boston Solar, which is a subsidiary of Single Point. So this is part of Sing stock, right? Boston Solar unveils revolutionary smart electrical panel, reinforcing leadership in solar energy and home management solutions. So that's what these guys do. They have these high-tech solar panel solutions, as well as they do some air purification, things like that, right? So mostly renewable energy sort of things. But here's where it gets really interesting, right? You can see that it says right here, subsidiary Boston Solar, a leader in the Massachusetts renewable energy market, is a proud partner of the Boston Red Sox. So these guys actually have a direct partnership with the Boston Red Sox, pretty massive. I think what part of that plan is they're going to be installing solar panels for Boston Red Sox facilities. So to have such a huge client like that on an OTC stock, and also massive revenues for an OTC stock, very impressed by this company's fundamentals, very impressed by their share structure as well. Like we talked about, they have this micro float, 3.8 million, and this micro float is going to be key, guys, because this thing can see such a big squeeze on a setup like this where it's coming off bottom. The stock, again, let's go back to the chart. The stock is beaten down. And why is it beaten down? Because of, most likely, these naked shorts, right? And we're going to talk about who they are. And it's the same guys that were on ABQQ, and we just squeezed them there. It was the same guys that are on ASRE, and they got squeezed on ASRE. It was the same guys on GTII. They got squeezed on GTII several times. So there's a very good theory in place here for why this can see a big squeeze. And keep in mind that this micro float is smaller than all of the other examples I just showed you, right? Significantly smaller. So this actually has the strongest potential for a squeeze out of all of the examples I just showed you. Okay, so now we're going to jump into who are these guys that are naked shorting this thing, or who we think are naked shorting this thing and beating the stock down, right? Well, here's an 8K from September 8th of this year, so quite recent. And we're going to scroll down. We're going to scroll down all the way, right, to who signed off on it. So this is a lending agreement, right? The company got a loan from these guys, Diagonal Lending. But who's that? That's our buddy, Kurt Kramer. Now, for those that don't know, I covered in the ABQQ video. I'll cover it again real quick here. Kurt Kramer, known toxic death spiral funder. Now, obviously, when the companies get loans from him, they don't know what he's up to yet, right? But it becomes apparent. We know because we trade the markets so much that we see what he does. And what this guy does is he'll give company loans, right? And then he'll short against his own convertible position. So when, let's say, he gives them a loan and he can convert shares based on that loan. Let's say he can convert to 10 million shares. Well, what happens is he'll go short. He'll go short and start beating the stock down, which is exactly what happened here. Look at the chart. As soon as September 8th comes around, big red candle, right? They immediately start shorting this thing right after that 8K is filed. So as soon as they have those convertible loans, they start their short. And so they've been beating this down, beating the price down all the way to under $1, almost to 50 cents. Now, as you can see, we have this nice big rebound candle today, which would imply bottom is in and squeeze can begin, right? But what they're thinking is, okay, we can just short this down so much that we can just naked short it, and when we convert later, we'll have enough shares to cover our short, right? But if the price goes higher, their loan converts into less shares. So then you're in a position where, let's say they're short 10 million shares, but now the price is twice as high, so they only get 5 million shares from their conversion. Well, now they have to buy 5 million shares back just to cover their short position, right? So that's how you can squeeze these guys, is if you drive the price higher and hit that ask, then what happens is they're actually going to have to buy shares higher with you. In fact, they might buy your shares higher when you sell for a profit, right? Because they're going to need to cover that short position. So that's the theory. That's the setup. It's an excellent setup for a short squeeze here. One of the best I've seen because of how micro that float is. But the Kramers, like I said, that's not the only thing going on with this stock. The fundamentals are very strong. They did almost 100% increase in revenue this quarter compared to quarter 2 of 2022. If we look at a couple more points from this, we can see that they have almost $30 million in revenue trailing 12 months. You can see that there was a 103% increase in gross profit, and net loss decreased by 59%. So excellent fundamentals being built with this company. Huge partnership with the Boston Red Sox. Tiny float, one of the most notorious short sellers on it. And we've squeezed this guy on every stock he touches. I don't know why we can't squeeze him again here, right? Now here's the real kicker. If we go to their Twitter page, this is important, right? They just tweeted this morning, exciting things happening with one of our subsidiaries. Stay tuned for more details. Updates coming. That's beautiful for us as traders. I've talked about before in my past videos, we love speculation. We love forward-looking catalysts. That's what can really drive momentum and really drive positive price action on these stocks, is when people have something to look forward to, a near-term catalyst that's coming. It creates speculation. It creates momentum. So we do have updates coming here. I expect updates this week from the company. So it's great that they told us, and it's great that we have that forward-looking catalyst, because now we have a very good reason to push the price up and try and squeeze these guys. So I'm just going to show you in comparison, if we're going to consider Sing a Kramer squeeze play, I want to show you a comparison to other Kramer squeeze plays and why I think Sing is even better, right? So GTII is the most famous of all the Kramer squeezes because it had the best results. You can see here they squeezed it all the way up to almost $9, and you can see it was a very similar story on the chart. Beaten down. You get that nice green candle right here, implying this is where the bottom is. And then a couple weeks later, boom, massive move, right? And then you can see they keep doing it. So once again, gets beaten down, boom, massive move. Very easy to squeeze these guys on here, right? But here's the thing. GTII has an 100 million float. 98 million held at DTC. Sing only has 4 million shares float. So Sing has a significantly smaller float than GTII, which would imply that it could have even further upside. So if GTII maxed out at $9 on what, almost, 50x the float. Sing can do, I'm not going to say 50x $9, but it can certainly have more upside than that even, right? Because the float's just way tinier. That's the nature of the beast here. And then we look at ASRE. Again, big squeeze that happened on ASRE since August, and it's still kind of going. But if we look at ASRE's float is 37 million. Again, Sing only has 4 million share float. So Sing has by far the smallest float of all of these squeeze plays, which means it can have the most parabolic squeeze we've seen out of all of these tickers so far. And then ABQQ, did a 4x move, but ABQQ, 1.6 billion shares in the float. So again, Sing with the micro float of only 4 million shares, there's a very strong case to be made here that this thing could just rocket launch off of this base that has now formed. And again, we've seen it just recently in August. It did rocket launch to $4. I think it can do that again. I think it can even do more than $4 based on the fundamentals I've just described to you, which is that we know that the short squeeze theory is pretty much entirely correct here. And we know that the float is significantly smaller than the other short squeezes that we've seen. And we know that a tiny float can imply parabolic moves to the upside. Just needs a little bit of volume, needs a little bit of push, and you can really see a big run here. So I hope you guys appreciate the theory that I've laid out. And I hope you appreciate the excellent fundamentals of the company as well. And it's just so beaten down that it's due for a run here. So I really, really love this setup. I think it's excellent setup. I do very much expect this to squeeze, and I think it can do multiple dollars easily based on the setup. So thank you very much for watching, guys. I'm very excited to see these guys, Kurt Kramer, get squeezed once again. We've done it so many times now. I say we do it again. I love screwing these guys. I love sending these stocks. So very much looking forward to Sing. And companies doing excellent things. They have news coming this week as per company Twitter. There's our forward-looking catalyst. And thank you for watching, guys. I will see you next time.